Okay, so now we're going to talk about the different loan types. Just some of the general ones, though, because I know there's like a gazillion different programs for you. But can you explain the main difference between FHA and conventional?
Yeah, I mean, let's break it down into categories of loans that you might hear. So you have FHA, which is what we call government financing. It's a government, not issued loan, but it's a government-backed loan. Okay, and I'll explain more about that in a minute. Within the government category, you have FHA, you have VA for our veterans, and there's also USDA, which a lot of people don't know about. They think U.S. Department of Agriculture, yes, they do loans.
Yeah.
And those are loans that are done in more rural areas, and it's cool because they can let you do 100% financing. So if you got clients that are buying in some of these outer areas, up in Lancaster, and there's even pockets around here that every now and then I'll be like, is within the region. The area has to be designated for that, but that's one thing you can do, and that's government loans. Then you've got conventional loans. Conventional loans is the broadest category. I would say a good 70% of your transactions are going to be in that conventional category. That's what most banks and most customers are getting. Okay, and then you have another segment called non-QM, which means non-qualified mortgages. These are mortgages that don't fall into these other categories. They're typically specialty loans that are dealing with niche types of situations. But coming back to I think the main thrust of your question here is, what's the difference between, say, conventional and FHA? Because those are the big categories most clients are trying to figure out. FHA has often been viewed as the go-to for the first-time home buyers because it was originally designed with really low down payment and had a lot of flexibility for people who may not have fully established their credit rating yet, maybe don't have an in-depth credit report or don't have the best credit. FHA is going to give you a lot of leeway there. Okay, so FHA, low down, not the best credit, minimal resources, that's kind of be typically your go-to. Conventional was originally designed with a 20% down payment in mind. However, you can do a conventional loan with as little as 3% because they wanted to get.
Wait, can you say that again? Because we get that pushback all the time.
Yeah.
No, I have to have 3% for a conventional.
No, you can do a conventional loan with as low as a 3% down.
Okay. So the people in the back heard that, I hope.
Yeah, and they did that to compete with FHA.
Yeah.
I'll tell you where the difference comes in is they both have mortgage insurance. Okay. And the FHA mortgage insurance is kind of on a flat rate for everybody. It's usually 0.55 if you're in that 3.5% down payment category. Whereas conventional's PMI is highly dependent on the borrower's credit score. Here's what I want you to know is conventional loans are really sensitive to credit score and that profile. So if you don't have the best credit rating, you're going to get a higher interest rate with conventional.
Okay.
With FHA, it's not as sensitive to the borrower's credit score. So somebody who doesn't have a great credit score might still be able to get a pretty good interest rate in the FHA world.
Okay.
So that's why they end up there. Now,